Find the stream software. Where are we? 10 seconds. All right. Boom, pow, timer done. All right, so good. Good morning. Hey, it's Tuesday, December 22. It's a trading day. All right, so what kind of things do you want to do today? Would you like me to cover euro? Would you like me to cover dollar? Would you like me to cover yen, gold, oil, Bitcoin, pound, Brexit, stimulus? What's the number one thing? Type it in the chat. What if there's only one currency pair I covered today? What would that currency pair be? Be choosy now. What's number one on your brain? And without further ado, let's go! So, good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. I guess I said that 4 times now. Good morning. Hey, my name is Wayne. Hang on, I'll try to adjust this a little bit. My name is Wayne. I'm a currency trader, and I'm super excited to be here. It's one of the best of the 24 hours in a day. It's one of the best hours hanging out with you. So what are we going to do? Technical and fundamental analysis. Why are we going to do it? Because you need to learn how to put together trade plans that predict the future, right? Pretty simple. Predict the rest of the day, predict tomorrow, predict next week, next month, next quarter, next year, and the rest of the decade. Master Trader says, yep, we got cut off yesterday doing a rotation speech. Well, I think you got the part where we rotated from sectors inside the stock market. And I was simply saying you could rotate now into other countries. So why buy more tech stocks, right? You might rotate into small cap, but you might rotate into the UK. You could rotate into the Eurozone, right? That's all. And you rotate that way. Okay, coolio. So it's all about putting together trade plans, combining fundamentals so you know what direction to be pointing, and technical so that you can figure out the right time and price to buy or sell. That's what you do. Okay, so that's the malice of forethought sort of thing. You need to have a plan. Not just react emotionally. See, using the malice of forethought thing, that's a legal term. If you
just gone through the 8 o'clock hour here in New York, we're about
if you plan to murder in advance, okay? Malice of forethought. You thought about it in advance. Then that's murder in the first degree. If you just freak out emotionally and there wasn't a plan, you just responded and you grabbed the gun, boom, 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 and you're like, that's murder in the second degrees, right? So I want you to make profits in the first degree where you have plans. You don't just react emotionally to the market, but you thought about it, you strategized, you planned, and then you killed. So who's going to kill it in 2021? All of us here, I'm sure. So I'd like to thank Traders Wave for being part of our community as well. They're a broker, you're a trader. Why don't you give them an opportunity to earn your loyalty and respect? Because right now they believe that being part of this community that focuses on education truly benefits you as a trader. You develop the skills and the confidence necessary to trade conservatively with discipline. And they're like, hey, that's the kind of client we like. So think about it. That's the type of people you'd be working with Trader's Way. So if you are well on your way, or believe you'll be well on your way one day to starting a successful Forex trading business, you're going to need an execution partner. And it should be someone that you like and trust and can rely on. So fast execution speed, small spreads, wide swaps, world-class customer service, tradersway.com. Good people. So I got, in the background, you'll hear, I got Trade the News going.
You're listening to Trade the News.
Okay, so it's a new squawk. Been using them for a million years, just so you know if it babbles in the background, that's what's going on. That's going on. Okay, Master Trader says trading oil is much easier now, meaning now that you have a validated strategy. That's cool. Hey, Book Fixer on Twitch, do you notice you're also a moderator on Twitch now? Wink, wink, nudge, nudge. You know what I mean? Okay. Where should we start? Well, I guess we'll start here. And then let's talk about yesterday. Yesterday was the, wow, it was all, hang on, the red, wow. Who messed with my template? Was it you? What's going on here? Hang on, my template's all messed up. Is it this one? No. Hang on. Game capture. Mic. Game capture. Is it a game capture that I got going? No. Hang on. It's all weird. Is it this one? Forex.Today frame. No, look at it. It's all messed up. Webcam, full screen. Oh, must be this one. All right. That's weird. Look, everything's messed up. Sorry about that, ladies and germs. Look, even the background's messed up. This crikey, this is crazy. How did it get so messed up? What did you guys do? Who did it? All right, so there's that. But even the background is, color source is messed up. Okay, and then this is a bit messed up. No, it's this thing. It's all right. Just apparently I have to, knew my office was dirty, but you can't see like the temp. Everything is messed up. What happened? Crazy. Where's the frame? Forex.Today frame. Is that it? I had it. These things are so tricky. Sorry, guys. There's layers and layers and layers of things, and I'm trying to find the right layer. Hang on. Browser source, webcam frame. Forex.Today. I can find video capture, webcam source, social stream, meme board. Where is this? I can't grab this thing. There's too many layers. Sorry, I'm trying my best. I just can't grab the layer. There's layers on top of layers on top of layers, and half of them I don't even know what they are. Let me try again. View video capture device. Forex.Today frame. It's not grabbing anything. Image. I just can't grab it. What is all this stuff? There's the background. Sorry. Well, I don't know what's happened. Why did it just suddenly not work? That part I don't know. And I can't grab the thing in the way. Maybe part of that new Windows update or something, huh? So let me try to get this out of the way. Let me try to pull all the layers back. There it is. Wow, check that out. I want to let go. Okay, that's a little better. Okay, that's a little better. I could probably deal with that. Okay, okay, okay. Now can I still... Okay, my fire is out of control. Gotta move the fire back.
Hey, listen!
All right, as long as we got that. All right, we're back in business. I don't know why that happened, but let's get on with it. All right, one more. Just because I love it. I love it. Okay, it looks like we're in business. All right, we got the beeswax. Okay, so what the heck was going on? Sorry about that. I don't know why all that was messed up. There was multiple things messed up, and considering I didn't do any of it, I don't think I did. Okay, but at least we're back in the beeswax. All right, so let's see. De Costa, email me, wayne@fxbootcamp.com. We'll get you fixed. Okay? Master Trader says, watching some of the NFP videos from 2016, is the Baltic Dry Index still effective in today's market? Not really. I mean, it's still correct information, but I don't look at it as nearly as much as I used to. Okay. What else did I miss? Just reading through your posts here. Okay, Mahai says in the fundamental course, there wasn't sure about how the Fed influences E as far as excess reserves. Okay, and that is a subtle one. Okay, because it's
We're inside 15 minutes now to the bottom of the hour. We're going to get to the major data of the morning when we see U.S. third quarter personal annualized GDP as well as personal consumption, the GDP price index, core PC expected up 3.5% quarter over quarter. The GDP price index expected up 3.6%, and GDP on an annualized basis for the third quarter expected at 33.1%.
You know, as soon as I talk, he's going to talk again. All right. 1 over R plus E is called the money multiplier. So this is out of the fundamentals course, guys. Money multiplier. Okay. Okay. All right. 1 over R plus E. One is the required reserves, and the other one is excess reserves. And this, how does the Fed influence the ER? ER is a business manager's decision. It's the banker makes a decision. This could be anything. Every bank will be different. Okay? Typically, a bank will want to deploy excess capital, but in other situations where they seek liquidity, they might want to have more ER. But every bank is different based on whatever the quality of their business, the quality of their market, the fundamentals of the market, the cycle, business conditions, who's running the Fed, for example. All these things are business decisions. So so how does the Fed influence this? And this is things like the discount window, interest paid or charged on excess reserve deposits, and such like that. So if you had to pay, for example, if the Fed charged you to hold money at the Fed, you are less likely to hold the money at the Fed. If the Fed paid you money to park money at the Fed, the more they paid you, the more likely you'll consider it as a place to park your money. Okay? Because you'll look at it as opportunity cost. It'll just be in your calculations as a business manager of what to do with the capital that you haven't deployed into a loan, for example. Does that help? Okay. Yep. So, one way of looking at it is a business manager, or in this case, the banker will decide at the commercial bank how much buffer they need between the required reserve and other things, right? So, for example, let's say you're a commodities trading advisor in the United States of America, okay? And you work under the CFTC, and the CFTC gives powers to the National Futures Association. And for you to be a fund manager, right, you need your Series 3. You need to be a member. Okay. You need FBI background checks and all that kind of stuff. And then if you want to be a Forex trader, then you have to pay for that. So you need to be a Forex fund, all this kind of stuff. And lastly, you need $30,000 net cap requirement, net capital requirement. Okay? Which is exactly the same as required reserves for a bank. 1 over R plus E, that's the money multiplier. R is the required reserves. E is the excess reserves. Okay? That's for banks. Now, if you're a Forex trader, you're required to, right, you're a commodities trading advisor, which means you work under the CFTC through the NFA, And to be a Forex trader, you need a Series 3, and I think what's the other one, 36 or 63, something like that. So you need a Series 3, Series 63. You need to be a member of the NFA. You need to be registered as a Forex trading fund, blah, 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 a whole bunch of things. Of course, disclosure documents, disaster recovery plans. You need to do your anti-money laundering, all that kind of stuff. And you need to have $30,000 in cash in an account that you never touch. And if you drop below 30,000 even for a day, so for example, you're required to report your net capital position every single month, but even though you only report it monthly, if you drop below 30,000 even in a day, you're supposed to report it. Like, hey, I know you wouldn't know if I didn't report it, but I'm reporting that I dropped $2 below this. And you become deficient, you might get a fine, that kind of stuff. So now as the manager of your Forex fund, you decide you're required to have 30, but if you drop below even by a penny, it might cost you $20,000 in fines. Plus you get a free audit, which will cost you another $100,000 in professional service provider fees. So you might say, well, I don't ever approach that. So you're going to put $10,000 on top of it as a buffer. Which means not only do you have to pay for all this stuff, on top of everything else, you have to have $40,000 in cash in an account that you never invest, never trade, never touch, never do anything with it. And then, of course, if you ask the NFA, why do I need to do this? They say, well, it protects your clients.
Spain's Deputy Prime Minister Calvo saying EU recovery funds to be
I couldn't figure out how, though, to be honest with you.
Partnerships. Comments from a Spain official, Deputy Prime Minister Calvo.
Okay.
According to Axios, Facebook will be offering some new account security options into 2021. Franklin Bravo.
So now you would decide, do you put it in a checking account or a savings account? And you could ask the NFA, will they accept a money market account? Each one of those being higher yield because of the lesser liquidity. Okay, so anyways. So the Fed will try to impact or influence your business decision-making process as a commercial banker by adjusting whether they charge you or pay you money for your ER. Cool, right? Sorry, long answer, but if you don't understand fundamentals, you don't have a chance, right? So I'll hope that's helpful. Okay, Euro generally up, CAD getting crushed, Swissy all over the place, dollar all over the place, yen all over the place, APAC down, right? So all our commodities are down, pound all over the place, and euro up-ish. Okay, did you guys like trading yesterday? High vol, huh?
And with about 5 minutes to go to this data, the GDP data, we're looking at a 10-year yield at 93 basis points, higher by about half a basis points. The 2 10-year spread hovering right around 81, little change from yesterday's. Interest rates here in the U.S. and equity futures in general are not overly volatile, with the S&P minis pointing to a higher open of about 0.25%. The NASDAQ 100 futures up 0.5%. We're looking at better than 1% gain for the CAC 40, the DAX, the Spanish IBEX, the FTSE MIB, and the FTSE 100 is up closer to 0.5%. Bit of a bounce back after yesterday's sell-off in European markets. Interest rates there, the sovereign 10-year predominantly higher, up 1.5 basis points in the 10-year gilt. The French 10-year up higher by about half a basis point. In Germany, up about 1/4 basis point today. The dollar index is in the green once again, but still well off the pre-market highs we saw yesterday. And 90.19 last in the dollar index, and WTI crude futures are down about 1.5%. And we did see some volatility, in particular in sterling earlier in the session. This follows the report that the Europeans rejected the latest offer from the UK and Prime Minister Johnson on fisheries. The report's scuttlebutt circulating, and Johnson offered a 33% reduction in catch through 5 years, with the UK saying they want about a 25% reduction in the quota over a 7-year period. There still seems to be some distance on the fisheries issue, despite the reports of the conversations between von der Leyen and Prime Minister Johnson and the new concession from the UK, which was rejected. We did see cable fall to a low of 133.61, currently trading 134.17.
Is he done? Yeah, so yesterday is about taking profit and other people getting back in that already took profit. They're jostling for position for January, depending on what you want. Okay? That's why it's volatile. Drops 200 pips and then rises 200 pips. What does that tell you? You better trade at the top or the bottom. In the middle, it's dangerous. Remember, I've showed you over and over and over. This is where bulls would buy. This is where bears would sell.
President Trump formally signing the federal spending stimulus legislation that was passed late last night through Congress.
Yeah, get some free money. Awesome. Love it. This is why you should have 9 kids. Yeah. Why would you want to be a U.S. citizen? I've lived here 30 years and I'm not a citizen. Oh, I see. Well, it's going to cost you a heck of a lot more than $600. See, America's a great place.
1 minute now to the bottom of the hour. We'll get the third quarter GDP reading. U.S. quarter over quarter expected 33.1%. Line with the advanced reading.
America's a great place to make
Personal
money.
consumption expected at 40.6%. Price index expected 3.6%. And core PC quarter over quarter expected 3.5%.
See, if I made $1 billion with a green card or a citizenship in the United States, I would have to pay the taxes on the $1 billion. If I make $1 billion and drop my green card, I don't pay taxes. I just can't live here anymore. There's plenty of places on earth I could live
GDP data in just a few seconds.
with $1 billion. I can be president of South Africa. So I can make another $1 billion. Double my money.
Still waiting GDP.
This is what happened in the past. We're going to get some great news about 3 months ago. Romania, I love the country. Actually, I'd like to visit Romania. Yeah, well, I got better than third grade education. I had to fill out the form the other day, and they're like, how many years of education do you have? And I'm like, 22. What an idiot. Come on, GDP, let's go. Kick busted.
Philly Fed reporting non-manufacturing regional business activity at minus 26.8.
Michael, you have to pay taxes
versus minus
if you're a
15.9
resident.
in December. New orders were down 4.5 in December after falling 3.7 in November. Non-manufacturing data from the Philly Fed.
GDP data 33.4%, 33.4%. That's rised up 0.3 from the prior reading on the Q3 GDP.
Mahir, I would never plan for that. I would never, in this situation, I would not. See, I hope you guys are not just trading like at any other
The
day.
Q3 final GDP 33.4% in the U.S.
No, Michael, no, you pay U.S. taxes and state taxes, feds and state, for sure, and property tax. Oh my God. Right? Think of it. How'd you like to pay thousands of dollars a month just because you own a house? It drives me nuts. I'm like, why? I own it. It's mine. Piss off. Oh, well, what about your house? If it burns down, you'll have to call the fire department. Yeah, and I'll call them and give them a credit card number.
Data out of Canada, average earnings up 5.9% from a year ago in October for Canada.
Right? Then what's the response? Well, what about the roads? Okay, great. Charge $10,000 a year to drive a car.
Q3 final versus consumption of 41.
Okay, we'll get rid of that. I like the Singapore model. Like a car, you have to pay like $200,000 a year to have a car. I'm like, yeah, there's a good one. Guess what? They don't, right? Anyways. But whatever. So yeah, like the famous story I've always told is the year I moved from California to Georgia. I spent half the year in California and half the year in Georgia, and California owed me $50,000 in back taxes. They owed me $50,000 as a tax refund for half of a year. And the reason for that, in California, 20 years ago when I lived there, let me clear this out, I paid 9% tax. Okay? And from that, I overpaid my state taxes over the course of 6 months by $50,000. What does that tell you? And the interesting thing is, I got a thing in the mail, and California said, we owe you $50,000 because you overpaid your taxes over the course of the 6 months, and we don't have it. So they gave me an IOU. It was several months later, I finally got my money. Okay. It's interesting, right? Well, see, that's the thing, Michael. So it's the money abroad issue. So United States is one of the only countries where if I may move to St. Lucia tomorrow and Gary and I start a business and I make $1 million profit, I owe the government of the United States taxes on my $1 million. And I'm like, well, why? I didn't make it in the United States. I didn't make it from American companies or customers. Like, we're doing something cool in St. Lucia. And they're like, yeah, that's really great. That's awesome. We love your projects. Great. F you. Where's our money? So I have to pay the United States, right? So at some point, there's a number where I'll decide I'm paying too much. And it'll probably be when my kids are, in school and all that kind of stuff. And I'm like, you know what? I can move. Okay? I can move to St. Lucia, pay taxes there, give up my green card in the United States. But of course, my wife and children are citizens. So anyways. All right, look. Wow, GDP, man. Crazy on a 5-minute chart. Wow. Wow. Look at the volatility. No, stop. Okay. Cool. So I want you to think about this. This is the projected high. And what are we, 9 days away from the end of the month, but we got holidays and all of that kind of stuff. Do you want to throw down new trades? Are you treating this like just a regular day? Or I think this is where you should be in scalping mode. Right? Yeah, Michael. Well, you know, the Hong Kong model is interesting. It's very entrepreneurial. You pay low taxes, but if you need something, you got to pay for it. The stock market is much more entrepreneurial in the sense that they have many more companies that just tank and go to zero. And Hong Kong's like, well, dude, you invested into the company, so you should have known. Like, buyer beware, do your research. Why'd you buy a company that had nothing behind it? It's your fault, right? So it's easier to get listed in Hong Kong. And they're like, well, it's your money. You gave it, you invested, and you lost it. Like, what does it have to do with us? If you want to throw your money at a bad investment, that's your problem, right? That's the Hong Kong attitude. And your income tax is very low, right? But here's the part I really like. Okay. Let's say you buy an apartment in Hong Kong, you live in it for 10 years, and you sell it for 50% more than you bought it. In the United States, you pay taxes because you made money. You're like, well, wait, I pay taxes before, right, on the money I made previous to owning this, and whatever I had saved after taxes, I very wisely bought real estate, and I did good. I bought it, and now I'm making money because I made a good investment, but I made it on post-tax money, so now I invested and made money, and you're going to tax me again? It's kind of the same money. It's just I have more because I did well. They're like, yeah, good job. Nice apartment. F you. Where's our money? Right? Or you pay taxes on your income, and then whatever's left over, you decide to put money in to the stock market. So you make some investments. You do all your analysis and everything, and you invest in some stocks, and 10, 20 years goes by, and you've doubled your money. Great. In the United States, they're like, as soon as you withdraw the money, F you, pay taxes. In Hong Kong, just like in real estate, they say, oh, that was really smart use of your money. First of all, you bought an apartment and it's gone up 50%, and you invested in a whole bunch of stocks and they've doubled. That's really good. And you cash out, there's no taxes. Not on that, you already paid taxes on your income. Then the rest you invested it all and you made money. They're like, that's good. Good job. That's really smart. You did a good job. They don't tax that because they taxed you on the original income. Why would you pay taxes on your income, invest whatever's left over, and at the end pay tax again? Right? Like, why? Right? So anyways, I like the Hong Kong model. You invest your money and you make money, good job. But if you lose your money, no one cares. You were stupid, and stupid people, and right? What is it? Money and something are easily departed. It's just, I like that model. The buyer beware, right? Like, there's just little things about the U.S. government that make me chuckle a little bit. Like, you go to McDonald's and they tell you the calories on the food. The government requires that. I think it was literally Michelle Obama. And I'm like, dude, I'm eating crap at McDonald's. I know it's stupid. I know it's food. Like, I get it. Right? A fool and his money is easily departed, right? Yeah. So anyway, so I'm like, dude, it's McDonald's. I know it's junk food. Why do I need the calories? Right? It's just funny. I'm like, I get it. It's unhealthy. I understand. Right? So anyways, And then, of course, the best thing is having diet soda at McDonald's. You're like, you just ate a Big Mac and a bucket of French fries, and you drank a liter of Diet Coke. You're like, why? Anyways, so let's go back to this. Do you really expect this huge move? Do you understand that there's probably 50% less market participants today than a typical day, and then even less tomorrow? So you're deciding, are these big moves? Or do you expect big moves here? Do you expect? I mean, I don't know. I'm worried that you're treating it like a normal day. I think what you should. I think there are two forces that I would be concerned about. One is the stimulus, but like I said when we were here, it's been priced in. Okay? Right? Right? And right? And then two, the unknown counter trend for the opening of January. I don't know if that's going to happen, right? Yeah, no, Ron, I do too, but it's just funny. If you're eating at McDonald's, you should understand that it's all junk food, right? That's all I'm saying. Like, none of it's good. But it is interesting. There's a book called, like, Eat This, Not That. So they go to McDonald's, right? And they say, well, if you get rid of the hamburger bun, but put cheese and bacon on the bun, it's half as many calories. You're like, what? You're like, yeah, take the meat, put cheese on it, put bacon on it, but get rid of the bun, and it's like half the calories. You're like, oh. Okay. Okay. So anyways. Yeah, so I'm worried that we have low volume right now. Guess we could look at this somehow. Let's do it that way. I forget, am I able to adjust that? I'm not. I'd like to make them fatter, but I can't. Let's just make it darker, dark green, dark slate gray, dark green. Let's just do it that way. And go daily, maybe? Okay, so here's our volume now. Okay. Okay, you see how volume is below average right now? Here's the peak for the period. Okay. Oh, election night? So that's unusually high. Johnny says, American government's putting corn syrup in everything. Well, that's the problem with high fructose corn syrup. Your body can't actually digest it. So it doesn't know what to do with it, so it just stores it like it's fat. But you can't digest it. So if you got belly fat, it's usually, well, A, beer, and B, corn syrup. It's just cheaper than sugar. Now, the body knows what to do with sugar, right? But anyways, so let's say this is typically highest level of volume. And then, what, 50% of that is about here. So yeah, right now we're about 50% of typical volume. I mean, even this isn't even typical. That's typically high volume. Let's do, that kind of looks like there. Okay. So yesterday was a spike, but we also know it's an exit, right? It's an exit, and then the people are freaking out because of COVID 2.0 in the UK, and they're freaking out about this, that, and the other thing. I say it's the Monday we knew would come down, right? Remember how many weeks I said last week's Friday was the last day? Like the last day, right? We talked about the 19th only because in years past, 19th was the Friday. But like that's the last hurrah, right? And then Monday opened up straight down. And they're like, oh, it's COVID. Oh, it's because of how the two planets are aligned really closely. No, it's because trading should have been over on Friday. Okay? So, a lot of volume here, but I believe most of it was just people getting out, doing what they had planned on weeks in advance. Or it was COVID, whatever. I can't prove one way or the other. And now what? So you're going to have to decide, and right? And here it is. You ready? First thing you need to do, if you're a bull, using just plain old technical analysis, there's your first opportunity. Okay? If you're a bear, this is the best price you're hoping for a sell. That's it. Yeah, and by the way, Master Trader, the sugar industry and high fructose corn syrup and stuff. So the sugar industry back in the 60s hired Harvard, because anything that Harvard puts a stamp on is true. So they hired Harvard, and they said, prove to the sugar industry that it's not sugar that's bad, it's fat that's bad. And so they did all the research, and by the 70s, it came out, and then the government decided to listen to the Harvard study and the sugar industry. And by the time you got 80s, everyone was drinking or eating and drinking fat-free. So what happened to America once they decided to go fat-free? Americans got fat. Thank you, Harvard. It's interesting, isn't it? And one of the big things, anyways, we'll leave it at that. Yeah, what happened to Tab, huh? Well, yeah, you need to stay away from starches, but sugars are fine and fats are fine, generally, if you're active and healthy. Yeah, well, Kevin, so Kevin's saying, look, if you're active, it should be fine if everything's in moderation, but of course, nothing's in moderation. But since this let's say since 1980 to now, okay, we've changed our diet to from having fat in our diet to having starch and sugar. And not even starch and sugar, but starch and corn syrup. Even worse. Sir, I can't. Anyways, okay? So I'm trying to go back to this because fat's not bad. Okay. Starch and corn syrup is definitely bad. Remember, I check my sugar level every day. So I know what that will do. And instead, going to having fat in my diet again, but I have to see, we've spent these 40 years training our body to expect starch and corn syrup and to store fat. So now you have to change your body's chemistry to say, look, honey, there's no starch and fat coming our way. So you're going to have to go back to your normal chemistry and look for fat and burn the fat for energy, because this ain't coming into our body. So don't store the fat, burn the fat. Okay? Right? Yeah, I didn't say margarine. So anyways, so that's it. I'm trying to go here and say, don't look for sugar, don't look for starch, don't look for corn syrup. It's not coming your way. You're going to have to rely on fat. Okay? And that would be, right, the good diet. A normal diet, I think. Right, that's what I was saying, made it earlier, that the high fructose corn syrup can't actually be digested. It can't actually do it. It's not even that it doesn't know how, it can't, right? So it's just very difficult. Well, if imagine you're a caveman and you're running around and you're eating berries and digging up roots, right? And then all of a sudden, oh, fat! Oh, this fat's so good. I can store it in my body when I'm not using it and all that kind of stuff. There's a reason why it tastes so good, right? Ooh, a beautifully cooked ribeye or some fabulous pork. So one of the things I did, I held a family dinner. About 10 of us, just on the weekend. And first thing I did is I took out a pan and I cooked about 4 strips of bacon. Took the bacon out, right? And then I had chopped up Brussels sprouts and I put it in the bacon fat. And I cooked the Brussels sprouts, turning them around several times over the course of maybe 20 minutes. And then I put in some garlic and then cook that in. And then I put in cream, right? More fat, right? And then sprinkled in the bacon bits from my bacon from earlier. And then put some cheese on it, a blend of Italian cheeses. And then put it in the oven and cooked it for another 20 minutes. Wee. Good. Yeah. It's got some fat, but let me tell you, Brussels sprouts in a cream sauce seasoned in bacon fat, yummy. And I'm telling you, people that hate Brussels sprouts were eating Brussels sprouts. No joke. Okay. All right. So anyways, so here we are, and those are the decisions you need to be making. Okay? Long or short. And a lot of people are not making decisions at all, right? So one way to do this is decide, are you going to be long-term or short-term? If you're not sure, the answer is short-term. So I would say things like day trading. Do you want to be a bull or a bear? I'll throw bear down just for fun. I'm not saying that's the right decision. But now you know what to do. Okay? And the interesting thing is, bulls would have bought here because we know this is the bullish entry. Right? So you do something now, I'm like, dude, you're like 8 hours late. Like, what's wrong with you? And then bears, we know bears want to sell here. It's defined by that. So, and this is, front running the New York Open. So now that we're in the middle, I question whether there's a plan. And you're like, well, Wayne, how do you know this is a bearish sell zone? Well, first of all, it says bearish sell zone, right, on the daily. But this is the projected high for the entire month. Like, what do you mean you don't know? How could you be a trader and you don't know that that's the big out of December? You want to buy that? Like, what do you mean? It's really confusing. Like, what do you mean? You waited till the end of the month, right? Half the market's at holiday. And you want to buy it at the projected high for the entire month going into the holiday year end. Like, what do you mean? Yeah, that's what I said. That's the projected high, R2, right? So I'm like, you're buying it now? Why? Oh, well, London was... Oh, my God. Seriously? That's it? That's all you got? London was up? So I guess you're buying now? Really? Oh, my God. You need to have a little more depth. Okay. So you entered the short... What, yesterday is here, right? Yeah, so you got to hang on then, right? I think that's early, but I can't tell you, right? Like, I can't tell you it's too early. I think we got really 10 days before any serious action's going to happen. But I just want to make sure you're thinking properly. Like, are these day trades? Okay, cool. This was a good short, and this was a good short. Okay? Not 8 hours, right? Not 4 hours late. No, I know. That's yesterday, right? Right. So you're still in the trade, most likely, right? Unless you're only day trading, but I don't know how you got out. Like, this is what, weekly or monthly, I think. But anyways, I think it's too early for a serious short. But that, again, I don't know, so don't listen to that. All we know is this is very obvious on the first hours of the day. Very obvious. Okay? This is the New York Open. Again, very obvious, a sell. If you're already a bear. Like, if you're not already a bear, then you don't have a plan. That's the problem. You don't know. You swing both ways like a broken gate. Okay? You should have been a bear here. You would have been a bear here. You would have been a bear here. And you're bear here doing tomorrow's trading, right? I mean, it's just, that's it. Like, if you're a bear, and you'll do fine. Now, if you're not a bear, then you must be a bull. And there's a buy right there. Okay? And you're looking at it like this, a 382 Fibonacci retracement, and you're going to buy a dip at the London Open, double bottom, right, on a 382, and you're going to break through the highs. But what do you mean now? Like, you're literally eight hours behind. Like, now? What do you mean now? Okay? So, like, for example, let me make this more clear, because I can see it and I'm not sure if you can. Let me change this. Template, day trading, bullish. Look, boom. You got a double bottom on a 382 at exactly the London Open. Oh, good. So you bought it, right? No. I waited 9 hours. Why? Why? Like, why? Okay. So your only sort of recourse now, if you're a bull, is to do this, but you have to understand this has significantly higher probability than this, because you've now picked up these guys in the trade. So you got these guys doing this, and you got these guys doing this, and you decided to pull the trigger in the middle of these, right? Okay. I don't know why you decided that, but you have to ask yourself, are you asking yourself these questions? Okay? Right? Like I said earlier, my worry is that you come to your charts and everything is always the same. Right? Everything's always the same. Today is the same as a week ago. Today is the same as 16 weeks ago. It's a Tuesday. Let's find a trade. You're removing the human aspect. This is not a video game where every time you log into Minecraft, sorry, let's do Fortnite. Every time you log into Fortnite, you're like, oh, look, everything is awesome. Like, no, there isn't a reset. Today is nothing like yesterday. Okay? Today is nothing like Tuesday 16 weeks ago, whatever that was. I don't even know. Just today is different. Okay? Okay? That's all I'm trying to say. When do you think volume and volatility, well, let's just say volume. When do you think volume will be closer to normal in the Forex market? By the way, there's rendered butter inside my coffee. I'd say Mutual Fund Monday. You guys know what Mutual Fund Monday is? When is Mutual Fund Monday? Some good guesses here. Very vague answers from most people, though. January, mid-January, end of January. Like, what does that mean? Well, whatever it does, it does. I mean, we have to be a little more specific, right? The Monday after non-farm payrolls in January. Okay? Now, that's not the big event that we're talking about. The big event will be when the market opens. Don't be shocked if we have a big retracement, whatever that means. See, I don't know I can't tell you the velocity. I can't tell you the volume. I can't say euro dollar drops by 333 pips. Okay? It could drop 200 pips in a morning, and by the time you get to New York, it's already over. It could drop 800 pips over the course of a week. I don't know. But RWA, you either, remember, your job, if you work for clients, is to be ready, willing, and able for all opportunities. Okay? So when the market opens the first day in January, if the market's open, you got to keep one eye open, still clocking the pips. I know that doesn't rhyme, but Bell Biv DeVoe, now you know. Yo, slick blow. It's driving me out of my mind. That's why it's hard for me to find. Can't get her out of my head. Miss her, kiss her, love her. That girl is poison. Yeah. You got to keep one eye open, watching the market. Now, some people have adjusted, like Mahir says, adjusted Friday the 1st. Jim says Friday the 4th. The big volume of trading will return once mutual fund managers have had an opportunity to sit down with their investment committee and make decisions on how to deploy capital. Remember, they're a little slower. I mean, dude, they get a $50 check from Wilma every month. Comes out of Wilma's paycheck, whether the market's up, down, sideways. The money's always going to roll in, so they're not really that concerned. So they need to get their investment committee back, and I would say it happens on the Monday after non-farm payrolls, and then they say, okay, I guess we gotta rotate, and they make their investment decisions. So, but when the mutual funds come back, that'll be your big volume. Okay, and of course at that same time, central banks are always doing what they're doing. So we're looking for other influences of risk on and risk off. Okay, so what I'm saying is, if there's profit taking at the very beginning of the year because of tax deferral, then you will have a sharp drop in the market. Okay? That's all I'm saying. Okay? So, here's what you should be thinking about while you're smoking your cigars and drinking your wines and your bourbons and you're pondering 2021. By the way, is anyone going to have a planning retreat with themselves? I asked you last year. A couple of people, maybe 2 out of 200, actually did a planning retreat. Are you going to do a planning retreat? So one question is, if the euro dollar drops early in January, what will, and I mean will actually, what will you do? So I don't know if it's going to happen, but if you don't know what you're going to do now, then shisha. Yeah, shisha sounds good. What will you do? Were you going to wait? You're like, what? Did that just happen? That thing that Wayne was talking about just happened. Huh, missed it. Like, what are you going to do? But what does buy it mean? It's so vague. Oh, the market sometime in January will normalize. What does that mean? Like, that doesn't mean anything. What is your plan? What price will you buy it? How will you enter? How long will you stay? Okay. Yeah, when we get this COVID thing over, I'm going to do I'm going to do an FX boot camp retreat. We're going to meet in South Africa on the beach. I mean, I'm really stewing to do it. If it's not South Africa, it'll be Mexico. If it's not Mexico, it'll be Turkey. If it's not Turkey, it's going to be St. Lucia. Yeah, yeah. Canada, no. Well, I'll meet you in Moose Jaw. Yeah. What about Canada? Why? Hey, man, Canada had 17 years of my life. Good enough. Yeah, Basra. Yeah. So, Sumar! See you in Sumar! Party like it's 1999 BC. Yeah. Yeah. I would like to do a world tour. Oh yeah, look, Johnny. Any sailor that shows up to, you know, any coast of Canada, like you get to BC, you can have fun in BC. You can, yeah, you're out in Newfoundland, Nova Scotia. Oh yeah, yeah. Well, just imagine for what 500 years, people have been pulling into, that part of the world. I mean, gee whiz. But that'd be fun. I've always liked the idea of taking those tours where you get on a boat in Boston, you go up the coast, and right, you go up and come down the St. Lawrence Seaway and stuff like that. That sounds like a ton of fun. I'd totally do something like that. So anyways, are you guys going to do a planning retreat with yourself? And are you asking yourself these questions now? I mean, think of it. I don't know what's going to happen in the future, but I've talked for literally 365 days about stuff like this. And it's uncanny. Not every year, but sometimes we have it. The move happens and people come back and they're like, I didn't do it. And then inevitably it's my fault because I didn't tell you at what price to buy or what day to buy and all this kind of stuff. I'm just like, get ready, get ready, get ready, get ready. Boom, it happened. Right? Like, are you going to be ready? And what will you do? Well, the nice thing about South Africa is if we go in the northern hemisphere winter, we can enjoy the southern hemisphere summer. Cape Town is on a beach, so that's cool, and it's cheap. I didn't say more conservative. I don't know, because you don't know the changing market conditions. I don't know if there is such thing as conservative or aggressive. We know how to trade properly. So you get what the market gives you. So I wouldn't say conservative, but you need to make a decision on whether you're a bull or a bear. The rest is you respond to changing market conditions. Yeah, Iraq would be interesting. Obviously, there's a concern about safety. And look, South Africa has some concerns too for many. So I'd like to go to Turkey, but there's safety concerns there. So apparently, if you can get a 5-star hotel for cheap, it's because it's dangerous, right? So, and then... there's another one. I found there's an island off the coast of southern China that's designed only for golfing, and they have like 15 golf courses. And I think it's a Ritz-Carlton. They have one on this island, and it's cheap, right? So but the thing is, are you willing to fly to southern China, right? And go there, so I don't know. Thailand would be great. Malaysia, Indonesia would be great. Singapore is fantastic. It's not cheap though. That's the problem. But oh my God, Daniel and I had so much fun in Singapore and Hong Kong. I love Hong Kong. Cool thing about Hong Kong is you don't really need a car. And I stayed 2 weeks in the the penthouse of the Ritz-Carlton in Hong Kong. I'm like, dude, it's like home, right? And the one in, Shenzhen was great. The Ritz-Carlton in Shenzhen was one of the best I've ever stayed at. The service is fantastic in China. It's fantastic. You go to You go to a hotel in America and service sucks, right? Then you go to China and it's fantastic. Odessa, yeah, Kiev. Okay, India. India is great. I haven't done southern India. I've done central India. I've done northern India. That'd be fantastic. Dubai. I've done conferences at Dubai. Dubai is cool, man. Right? Oh, Johnny said Dubai or Abu Dhabi. Dubai is fantastic. I like Dubai. It's easy to fly into. I know all the hotels. I know the lay of the land. It's great. Dubai is great, and there's tons of awesome touristy stuff to do while you're there. Like, we could party in Dubai. Dubai knows how to party. Depending on the time of year or which Saudi prince is in town, changes the price. So, I've stayed at the Ritz-Carlton where it's $400 a night, and then I look it up again, and I want to go back a year later. I'm like, oh, I'm going to stay at the Ritz-Carlton. I look it up, and it's $2,800 a night, not $400. I'm like, what the hell? Yeah, Saudi princes in town rented the whole thing out. Right? They have one room. It's $3,000 a night for the cheap room. You're like, what the heck is this all about? So it's hard to plan for in that way, but Dubai is great. I'd do Dubai anytime. And the flight is so great. You just get on the plane, go to sleep, wake up. Hey, I'm in Dubai. Sochi. Yeah, Sochi. So anyways, do you have a plan? Do you have a plan? Right? Dubai is really expensive? I guess so. It doesn't have to be. No, maybe expensive compared to Iraq, yes. But I've recommended Dubai. See, the interesting thing about Dubai is they have everything, and everything is new. So you could get $100 a night, $150 a night hotel in Dubai. It'd be like a Best Western, and it'd be a brand new hotel. It'd be clean, cheap, close to public transportation, things to do. Like, you don't have to be a baller to go to Dubai. Stay nice little, nice little, yeah, I mean, it's all good. Right? Mohammed's there, yeah, so Mohammed knows. And if you need to save money in Dubai, you can stay in the old Dubai on the other side of the creek, I guess it is. Yeah, old Dubai is nothing like the Dubai you see in movies and TV, right? So I went there with some Forex traders, but they were locals. And it's amazing because you go from Rolls Royces to suddenly, people in little canoes crossing the river back and forth like taxis going to work. And, it's 90%, Indians, for example, not locals, but that's where the working class are. And there's super cheap hotels there, right? Super cheap hotels. And older hotels built in the 80s are on that side because the other part of Dubai hadn't been built yet. I like the marina, but I've stayed at the towers. What are they called? Anyways, stayed there. Anyways, let's get some. We have a request for Bitcoin. You can do that. I 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 。 . 。 。 . 。 。 . 。 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 .
. 。 . 。 . 。 .
You can do that. find. Trying to find the old video of Dubai. Yeah, here's one.
Hey, I thought I'd give you a quick tour of my hotel room here at the Burj Al Arab in
Al Arab. That sounds so Canadian.
here on the
Oh, for
looks like
sure.
a bed fit for a king.
Can you guys see that all right?
Very nice. Lots of gold and royal colors, purple. Nice little seating
It's
there.
my hotel room.
And then, oh yeah, a view.
Look at that. There's my boat.
This is the Persian Gulf.
Look at that one.
Dubai. We're on a private island that was actually made with this hotel on. Sit in bed. Watch TV.
So that TV pops out of the.
Very nice.
Look at that. It's got mirrors on the ceiling, yo. For the business traveler, you know. So all the hardware here is gold. Everything's gold. It's not brass. It's all gold plated.
Hot tub there.
That's all mosaics, of course. It's a little bright because it's all windows. Cool view, though, right?
There's a little office area for me to work. Nice view.
Look, businessman. I'm a businessman. I know it's hard to see. I'm sorry. This is so long ago.
Area, which I like. I like the blues.
What do you think? Nice room?
Very nautical.
It's beautiful, right?
There's the working area. What I haven't showed you is.
Now watch this. Here's the rest of my hotel room.
Hotel room. Take a look at this.
Huh? We could party there, right?
Oh yeah. So let's go down the circular staircase quickly here. Here's the main living room and bar. I think you've noticed that there's a little bit of a view. The bar area.
I still have a bottle of wine from there.
There's the beach below, private beach. You can see we're on an island. There's a water park. Up there is a
Is
different
it
part of
Wale Wale?
It's the snow skiing area. I don't know if you can see it with the camera, but just out there is where you can go snow skiing in the middle of the desert. Out there is Dubai, where I stayed most of the week out here. Stayed in the financial district, and there's the Burj, the largest tower in the world. Take a look at that. Huh? There's the upstairs.
So the whole hotel looks like this, by the way, like these
Yeah.
gold
Yeah.
and blue colors. It's crazy. I'm like, oh my God. Everything's blue and gold. Everything. When you go into the hallway, you're like, oh my God, everything is blue and gold. It's crazy.
Okay.
So we hung out here, me and about 5 Forex traders traded all night. We made like 150 pips each.
Some other Forex traders tomorrow.
There you go. So we did really well that night, and then we went out and hung
Whenever I
out.
want more fruit or drinks or food, I just press the touch screen and my butler comes.
Yeah, there's a cool butler. I have great stories about the
more
butler.
views. Beautiful water closet for guests over there that need a restroom. And you come through here, and here's the billiard room.
Nice. Snooker. Not
Very luxurious. This will be fun at night. Play billiards whenever you want. Views, 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 views. I
snooker,
don't know if you
not
can see it, but
not
there's a
8-ball.
$100 million
Snooker.
yacht down
It's
there.
huge.
I can borrow if I want to chip in for gas money.
It's
And
huge.
Here, the butler uses his kitchen for preparing things. Whenever I want coffee or anything. It's full. I think they use it really for catering events. That probably turn that billiard table into a serving table. I don't know, but that's a full billiard table. That's not a pool table. That's a full billiard table.
Snooker.
So, anyways, looks like
Yeah, sorry about the
a
bad
fun little
camera.
hotel room.
Like you got to hoof it. It's like a serious walk. So we can hang out there. Where's Al Arab? Cool, right? The cigar lounge is in the basement next to the restaurant where your table is in front of a giant piece of glass and like sharks swim past you. That's in the basement, and they have a little cigar area. And being me, I did smoke a cigar there. Did I get it for $400? No, if I recall, that was 10 years ago or something like that, and it was $5,000 per night. Yeah, and I got the Rolls Royce as well, and it was a cool experience. All right, so anyway, so we could do something like that in Dubai. Dubai is cool. Okay, you don't have to stay at a place like that. The Jumeirah Towers across, or see, I don't like the Ritz-Carlton in the financial district, but I like the one in the marina. So my first choice would be the marina because right across the street from the Ritz in the marina, well, first of all, because you're on the water, got to have that. But then you walk right across the street, and my favorite cigar bar in Dubai is right across the street from the Ritz-Carlton. So you can have a cigar and then run back to the hotel and have a cocktail, right? Because you can't drink alcohol in that part of Dubai unless you're in the hotel. So you run across the street, you sit out, you have coffee, you smoke a cigar, and it's like watching a car show. Because on the walk, people drive by in their cars and they're like Ferraris, Lamborghinis, Bugattis and stuff, but all customized, right? So it's like a car show. You just sit there, smoke a cigar, have a coffee. It's warm. You have the smell of the sea nearby. And then, of course, just like this moving show to keep you entertained. It's amazing. Because when you see someone that bought a car for $1 million and stripped it down and added another $1 million, you're like, that's a nice Bugatti. You're like, that's not the regular carbon fiber body. That's blue carbon fiber. You're like, oh, that's nice. Yes, I wrote it off as a business expense for sure. For sure. Isn't liquor banned there? Not in hotels. Yeah. I'm not talking about Saudi Arabia. Although, I wouldn't have a problem going to Riyadh, doing a conference there. I just don't know who would show up. You see the head and shoulders on this one. Yeah, I can see it. Okay. So here's what, like I always teach you guys. Bears will sell it high up here. We already know that. And bulls would have bought it down on the neckline. So most people are already done. Okay? Let me layer it again. Right? You see? Like, you should already know what you want to do. Okay. Happy New Year. Happy holidays. Preparing to short it. Yeah, okay. So if there's profit taking in early January on things like euro dollar in the stock market, yeah, I would assume Bitcoin would face the same influences. So remember, I don't have any inside information, so I have to make decisions. I think, or I believe, I don't think, I believe if we have major pullbacks in like the stock market, in euro dollar and Bitcoin, for example, those are three I'll isolate. If we have major declines in January, it's not selling. The decline is not based on people selling, it's people taking profit. Therefore, I will buy dips. Now, here's the interesting thing. This year, there are two things that would happen, let's say. Let's say we get a decline and then up, 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 and we're moving to 30,000. And we top out before summer, so the June Fed meeting. Or we defer and delay that move and we head down to more like the March meeting, the March Fed meeting, and then move our way up. So either way, it's either up high and then we come back down to the atmosphere, or it's the opposite where we come in low and then gain altitude, okay? That's what happened at the start of the week. Yeah, that's what I was saying last week, right? See, I got out at the top because we had predicted all of that. And now I'm out and I'm just waiting. That's all. I'm waiting. I'm not, I have all year, right? There's no big bet on the way. So I'm not going to bet you this falls. I'm not betting that this will rise. So I got a clean slate and I can wait and start the process. But I always like the idea of, like, let's say buy in, let's just redo it. Oops, delete it. Okay, I like the idea of buy in May and go away. I like that. That's what I prefer. But it may not happen that way, right? But I think between J1 and M1, January 1st to May 1st, we'll have a nice opportunity for me to buy. Okay? It could be the first week. It could be the 14th week. It's okay. The reason it's okay is because I've decided on the long run what I want to do. So if it drops, I'm okay looking for opportunities to buy, and I'm also looking for changes of direction from bearish to bullish and all that kind of stuff. I can plan things out monthly and say, okay, well, if this is a down month in January, based on monthly pivots, what is the right price? And then if we get it, we get it. We don't, we don't. And then in February, and then again in March, I'm pretty in tune to finding tops where a rollover could occur. And of course, we know that the Forex market reverses like an old man easing into a hot bath. And I know the prices in which that rollover would occur. So I can pay attention to tops, and then from tops I can project bottoms. I know it sounds like S&M right now, But I can figure these things out. Okay? I think if we have a decline, it'll happen in the first 90 days. It could be the first day of January, but within 90 days. And if so, I will recognize it, and then I already know what I want to do. I just want to make sure you're thinking about that. Cool. It's going to be tricky. By the way, I'd like to thank those that have joined the Swing Trading Group annual membership. Several people have committed for the entire year of 2021 to be on my weekly team. Okay, so I'd like to thank those that have converted from monthly to annual. Okay. And for that, in January, I'm going to do more videos. We'll do some newbie stuff. We'll do some fundamental stuff. I think what I want to do is a second fundamental program. Yeah, I saw that, Jimmy. Email me again and I will rebate. Okay. Yeah. How do you pick? It's the inverse, Peter. PF, what's your best euro dollar buy price? Give me a situation, PF. Are you a bull? Are you a bear? Is this a day trade? Is this a weekly trade? Is this a monthly trade? For those that want to sign up, yes, it saves you, I think it saves you, what, $300 or something? You save $300. I don't think anybody is joining the annual membership to save $300, but I'm giving you $300 discount because it makes sense. So people are signing up to commit. They're committing to a year that avoids complacency. So you can say, well, I've been hanging with Wayne for a year and a half, 2 years. I really got this swing trading down. I'm really good at it. I'm profitable. I got it all set up. And then off you go, and it's, right? And it's different on your own. It's good to have a community. It's not just about me. It's about being with a community of like-minded people and also committing to being there every week doing your job. Right? So that's what it is. So if you're part of my group already and you're paying monthly and you'd rather switch over and make a commitment for 2021, it keeps me committed for another year, is another way of looking at it. So if you're in my group, Wayne at fxbootcamp.com. Okay? Yeah. Wayne at fxbootcamp.com. Okay. PF says, PF Chang says, bull monthly longer. Okay, well, back in April, I have to start there. Okay, PF? Back in April, Jerome Powell at a press conference said something. He said basically like 5 or 6 words. And I said, because of that, my bias is short USD for at least 5 years. Okay? So you have to understand that part. Yeah, and Gary, it's for my group, not Ryan's group. So, yeah, so if you're going to do that, you still get access with me weekly, but that's a whole different thing, right? And one of the things I just did is I reconfirmed with my investors of our program, right? So I'm going to smile ear to ear once you guys put a few $100,000 in your pocket. Now we can talk serious business. And so that is going to be cool. That's not going to be your first year, likely, Gary, but your second year, you can start that process. I can't wait till we meet up as a hedge fund group, and I'm like, okay, where's your money? And you're like, well, I got 300,000 right here. I'm like, oh, that's cool. Okay. But anyways, let's get back to this. Okay, so are you with me, PF? You have to understand this first. Peter, what I'll do, I would record the new fundamentals course. I'm not redoing, I'm doing different fundamental stuff. I have to plan for it, all right? So I have a general idea what I want to do. But I'll do it with the live group first, and then the archive of it will go into the general FX Bootcamp training courses. So if you're an FX Bootcamp member, you'll get it, right? You won't get it live because you're a member of and you have access to recording. So once it's all recorded, you'll have it. Okay? But for those that have access to the live group, I might as well do it in front of a live audience, right? So maybe Tuesdays and Wednesdays, that kind of stuff. Okay, good. Yes, you got the USD sell. Okay, but it's fundamental bias is what I'm getting at, PF. So, right? So that's the next thing. So that means for euro dollar, and you picked euro dollar, let's go to that one. That sets up everything for me. Okay? So let me see here. Okay. So this is from the live trading group from 2 weeks ago, where we have this let's say potential strategy of up, down. January opens hot and then comes down cold. And to make the decline even better in January, I'm putting this one OOP into a CT and the CT down to the PP. Okay, so anyways, let's go back. So just since October, okay, this is the October buy zone. Okay. This is the November buy zone. Okay, and then this is OOP, which we ride the 4-hour 21. This is daily though. So the 4-hour 21 is in here. Okay, so right now, oops. The next part of this that I want to express is that in here, okay, our exit was based on up into the 19th of December. How many people can confirm this? Right, here's November, or in here, this is pre-trade, this is pre-election, post-election. But the idea is we buy, there was never a discussion, not even once, of selling. And that you're either in front running or in after, and the exit will be as close to December 19th as you have the strength to go. Well, you can't Google it. I made it up. Yeah. Okay. So I'm going back to PT here. No, sorry. Yeah, PF. Sorry, PF. This sets up where we are now. So now you're asking me, based on technical analysis alone, what the best buying price for January is for euro dollar. Is that correct? I have to set it up first. If you don't understand where I'm coming from, I can give you an answer and you won't understand. And maybe even worse, you just do what I say, and then that's, of course, the dumbest thing ever. I'd rather you see where I'm coming from, so then you can, even if you disagree with me, you know where I'm coming from and you'll have a better understanding of why you disagree. Okay? But are you following me so far? So I always ask if people are following me, because people often ask these giant questions and then don't even stick around for the answer. So I always good. So, right? So let's do it this way. Let me look at, oh, there we go. My analysis tells me right there. Okay? Mm-hmm. So you could use different methodology, of course. Okay? Now, that's the price. That's the best price using nothing but technical analysis. But I'm not using only technical analysis. So I wouldn't be shocked, for example, if we saw something like this in January. Okay? Now, you don't see that technically. That doesn't exist right now. I'm projecting based on a form of fundamentals that I call seasonality. Seasonality. Okay? So I'm preparing for that more than this. Now, of course, I don't know the future, but technical analysis would tell you this. Okay, that's true. That's what it's doing, but it's backward looking. I'll get to that in a second, James. Okay? You see, technical analysis is backward looking. So based on backward looking data, it says in the future that would be a great price. But I'm like, okay, that's cool. It's true. And that might be the case. I'm not here to tell you that's not the case. But I'm very open-minded for the bigger drop. So we're at 22 and change, right? Do you remember my target was 22 and a half? You guys remember that? 22 days ago, I said 122 and a half is the best exit price for December. So we're still below that. Okay? So now I'm looking into the future and trying to project that maybe instead of being at 122, I'm going to buy it at 118. It's 400 pips down, yo. That'd be cool though, right? I'd still be a bull. Now the media will be freaking out. It's because of this. It's because of that. There's all these other reasons. It's crazy. It's the Biden inauguration. It's the COVID counts. It's the this. It's the that. And dude, it's just normal. Okay. So now the question is, how do I come up with 120.71? Let's change to the chart. Insert template. Position trading, bullish. Okay. 121. Oh, here it is. Sorry. There it is. So the question was, what is the best price? That's specifically, what is the best price? The best price you could hope to buy euro dollar in January based on nothing but technical analysis is right there. 120.71. Okay. Okay. And if it drops there, I'll probably buy it. Okay. No, it's not. I don't have 60. I have 70. 71 and some change. This is 69 and 73. It's right in there. Delete. Let's see. Let me get rid of this. Hang on. And okay. So anyways, it's right here. 71. Okay. But it may not be, so I'll try a dirty little estimation trick. You want to see a Forex trader hack? Let me hack this for you. Template, position trading, bearish bias. And now I'm going to take this and this. Oh, look, 118. And now, okay, you see that? 117.80. It's what I just said. So what I'm saying here is January opens up bearish, hardcore, and we hit, right? We hit the S2, and I'm long the rest of the year. Whoa, dude. I just showed you the same thing using two different methodologies. And we also know you're like, wait, Wayne, if you go back 6 months, you'll also be 2 standard deviations from the trend. Oh, I know. Right? Well, schnickerschnacker. I want to ask you if you put this type of time and effort into your planning. I don't care if you agree with me. What I care about is that you're doing your job, because if I'm wrong, you're probably right. Actually, we're probably both right. Okay? I'm just trying to motivate you to spend more time thinking than you do trading. Okay? Any idiot could be a trader. 5% will be kings and queens of the universe. Right? Are you a king or a street sweeper? What kind of mindset do you have? Sorry to throw Shakespeare at you like that. You can be a king or a street sweeper, but everybody dances with the Grim Reaper. By the way, PF, are you still with me? Did I satisfactorily answer your question? Cool. Yes. No, 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 no. Have you joined FX Bootcamp, PF? Is it Ham? I think it's Macbeth. Isn't Macbeth the one where he holds the skull? And he has his soliloquy? All right, good. With the skull. Yeah, right on. Holy smokes, though, huh? It is Hamlet. Okay, okay. Right on. In sooth, I know not why I am so sad. That's actually Merchant of Venice. Yeah, right on. With Horatio, yeah. Yeah, I figured Gary was overeducated. Yeah. It's amazing we teach our kids this stuff still, huh? First, we're going to teach you Hamlet, and then Macbeth. And the kids don't understand anything they're reading. But we refuse to teach you how to manage a bank account and your checking account. We refuse to teach you life skills like how to get a good job, how to apply for a mortgage, how to handle your family budget, how to pay for insurance, why you should have insurance, how to save for the long term. Right? It's amazing, right? Is there an affiliate program for FX Bootcamp? No. No. You're making up for it now. Yeah. Which puppets? I missed that one. Oh, it looks like there's a side convo going, huh? Yeah, okay. Cool. So I hope you guys join FX Bootcamp. It's the way, it's just there's resources made for you to learn. So if you're finding that you're lacking, you can solve that problem very easily. It's still almost 80% off. Okay? Like, dude, what more can I do? And if you join the live program with the live group, I can work with you weekly. And in fact, in January, we'll probably meet 2 or 3 times a week because I'm going to do the second fundamentals course. So if you're going to join my swing trading group, join now. Get going. Spend the next couple of weeks in December with holidays and stuff, but still spend an hour a day going through all the video training, right? And then in January, you'll be with me when the market is popping. And I'll do the new fundamentals course. And we'll do our weekly trade planning for the month, for the week, and day trading. Remember, in the swing trading group, we covered day trading and swing trading and position trading and trader psychology. There's group work. It's not just listening to me. I mean, there's no better time than right now to do all that. Yep, Kevin's in. Yep, Kevin just joined for the annual. Jim's in for the annual, right? So people are signing up for another year. I've known Jim for 15 years. He's just signed up and committed for a whole nother year, right? It's not because it's bad advice. It's not because he ain't improving. Think about that. Okay? Yeah, so make some scholarship. Well, the thing is, I can't make up for the fact that we buy and sell money. So I can't fix the problem if you don't have any money. Can I help you? No, I can't help you with that. Okay? So I've always said, take a second job, all that kind of stuff, do what you can. But if you're like, well, I'm in a small town in South Africa, everyone's dirt poor, $5 is a lot of money. I can't fix that. I'm really sorry. I mean, I can't. If you can find a way it's your way out of that situation, right? If you can find a way, if you can find a hustle, if you can find the support, then it's your way out. It's your meal ticket out. Okay? If anyone's seen my origin story video where I cry, you see where I come from. Dude, I had no money. I come from a childhood where $5 was a lot of money. Like my mother would save. I'm not joking. Save $5 for my birthday. Birthdays were the worst days. Now drink champagne when I'm thirsty. Right? Like that's where I come from. Cool. Right? I grew up part of my life in a town of 5,000 people. Part of my life, we didn't have a kitchen. So you're like, okay, and I'm in a small town in South Africa. We don't have kitchens. Okay, I get it. But I also, in Canada, didn't have a kitchen. We would go to, my job was go to the bathtub with a bucket, put some soap in it, get the hot water going, fill the bucket, then walk over to the kitchen and pour it into a bigger bucket so we can do the dishes. That's pretty poor. Right? That's pretty poor. That counts as poor. Now, I had a loving mother. I had a roof over my head. I walked to school. I had 2 or 3 paper routes. I worked nights. And I'm telling you, when I'm 11, I'm doing all this. And I took that money and I saved it. Look at that. Then I bought an Italian mountain bike. I used to go to school full of gangs and all that kind of stuff. A real rough school in the worst part of the city. But I had gold pens and mechanical pencils because I had 3 jobs and I saved my money. And I'm like, I want to be something someday. I don't even know what it is. I swear to God, in 5th grade, even though we were all dirt poor, I'm telling you, dirt poor in the school that I went to. And I remember I said, I gave a catalog. It was around Christmas. And I brought a catalog. And I gave it to my friends and I said, tell me what you want. Someday I'll be able to buy it for you. And that's how we dream. Right? That's how we dream. And I don't know where I got that. It's mentally deranged. But I remember doing it because I knew they weren't likely to get much, if anything, for Christmas. I had a loving family. So we would go have Christmases, and the Christmases were great Christmases, not because we're showered with toys and stuff, but we had a big family full of love, and it was great. But I had that even at that young age. You can get out. Now, maybe you can't because of where you live, or the color of your skin, or the God you pray to, or the people you like to love. All these things are holding you back. The cool thing is, with Forex, nobody cares. Except profit over volatility. That's it. Profit, how much money you made in 2020 over the volatility that occurred, that occurred in your portfolio. That's it. So if you can find a way to get yourself out of whatever's holding you back, Forex is going to be the way. Okay? Okay? So that's it. But I understand. I understand that you might be in a part of the world where that's inconceivable. I'm only saying as I empathize. Right? No, it's $8.97, guys. But, okay? But I do empathize. And Harvard has taught me that I still might have had an unfair advantage being a man, being white, being heterosexual. These are unfair advantages that I received at birth according to my education at Harvard. Cool. I can't do anything about that. I'm not apologetic. I'm sorry. I'm a cis white male. That's how I was born. But the rest was hustle. Okay? Okay? The rest was hustle. Hard work. That's that. And also pushing myself to do more than I'm capable of, which is dangerous, certainly, but it keeps you moving forward. I'm always needing to move forward. Anyone have an accurate tool to measure profit over volatility? Yes. Sharp ratio is equal to profit over volatility. Okay? Because I'll tell you the thought process of an investor, okay? You say, hey, potential investor, hey, Wayne, I made $30,000 last year in my Forex account. Do you want to invest? My first thought is Sharpe ratio. Because your 30,000 doesn't mean anything to me. I don't give a crap. Okay? So you break it down like a percentage-wise. Okay? What was that? Did you start with 10? Did you make 300? Or did you start with 3 million and make 3? Or 1 in that case. And then you can measure your volatility compared to that. Meaning, were you down to 10,000, you're up to 50,000, and just happened to be on December 31st, you happen to be up 30,000, but in November you were up 55, and in April you were down from where you are. You're only at 20 or 10, right? So remember, when you're giving these things, you're closing the books. On one particular day, in one moment in time, you're reporting to me you had 30,000 in profit. So I'm saying, well, I need to know what the likelihood, if I'm going to invest, can I count on this being $40,000? Or could it possibly be 20,000? What's the likelihood? And the difference is going to be the volatility. This could just be a random number. And of course, very often people artificially create that number to try to woo investors to say, oh, look, I grew this account from 20,000 to 30,000, so I'm up 50%. But then you can see statistically, it's just as likely to be down 50% than up. And maybe it is down, so you're reporting on, at the end of the year, you say, well, at the end of the year, we were up 50%, but it could be February and you're back down to 20,000 again, but you forgot to report that, right? So what you want to look at is the volatility. And then you can take this further and you can say, like this profit. So let's say you're up 30%, okay? Over your volatility. Okay. Does this show your alpha over your beta? No. Okay. Why is this not beta? Why is this not alpha? Because the other way you can define what I just said is alpha over beta. Okay, great. So what is alpha? You're up 30%. What is it not including? Can you guys figure it out? I'm a potential investor. And then you're like, look, I was up 30% last year and I'm leveraged 100 to 1. you should invest with me. Well, what's my first thought as a potential investor? Don't do the volatility thing. I already showed you that. What's the next thing? When we're talking about this numerator, what's the first thing that is missing? You guys aren't answering. Did the webinar drop again? There we go. Beta, no. Sort of. You're master trader. You're on the right. I'll give it to you, but I want a different definition. No, we're trying to. So master trader's got it right. So you take this minus the beta, and you get an alpha. But I want to know a different thought, because for a lot of people, they don't understand beta. So they're like, how do you get to your alpha? Well, subtract out the beta. No, but what is this, in this case, what is a good way to define a beta? That wouldn't be it, because it's percentage, so it doesn't matter. Right? It could be $1 million, it could be $1. You're still up 30%. Okay? All right, I'm going to give you the answer. But you guys have to click like. I'll give you the answer, but I want a like. Percentage change? No. Opportunity cost. Anna's got it. I could have invested into the stock market. Okay? Which is what Master Trader was saying with beta, the market. But I could have invested it into real estate, and it wouldn't be the same, okay? But I could have invested into real estate. Okay, real estate in my neighborhood is up 9.2%. Or I could have invested in the stock market, which is up 30%. Now, here's the problem with the stock market. Didn't we have a 30% decline? So what's the vol? The vol is high, so the Sharpe ratio would be low. But nonetheless, I could have invested in the stock market. Now, if I bought right at the bottom, which you know we defined that almost to the day we defined the bottom. So I could have just threw my money in there and would have been significantly, because we're up 30% from this, but I might be up 50, 60%. Okay? But let's just say the benchmark S&P 500 is up 30%. What's my alpha? 0. And by the way, is the stock market leveraged 100 to 1? No. So you might actually have a negative alpha. Where I could have just bought the stock market, had less leverage. Now, the downside is the volatility. But maybe in that case, it's okay. Okay? The volatility is a form of risk, is what it is. Because, again, what I was trying to indicate is at the end of the year, you want certainty to hit a certain number, right? If I invest in you, I'm not taking a gamble. Hey, let's try to make some money. Make as much money as you can. No. I'm giving up a cash flow for you. So if I give up, for example, oops, let's do this again. Or did I delete it? Well, I guess I deleted it. Okay, you're up 30%, but, right? I could have made 9% on that money anyways, in real estate. And the volatility on real estate's low because you're not mark to market. So if the market drops 50%, hey, if you don't sell it, you haven't lost 50%. You get that? How much is your house worth? Whatever I sell it for. Is it on the market for sale? No. It's worth whatever I think it's worth. Well, it's worth whatever someone else thinks it's worth, but I'm not selling, so it's whatever. Okay? So anyways, right, 9% asset appreciation plus any positive cash flow. So, right, typically a real estate person here on a year like this would earn, let's say, 15%. Okay, but with very low volatility. So now you're like, well, I earn 30% with high volatility, like let's say the stock market now versus real estate. So do I want the volatility or do I want the steady appreciation and cash flow? Okay, all that kind of stuff over the volatility. So like the stock market over that vol versus the real estate market versus that vol. Which one is better? So now you do Sharpe ratio versus Sharpe ratio. You see what I mean? That's why I said the answer to that question is for every dollar I put in, okay, based on its volatility, how much risk is associated with earning the money? For every dollar I put here, okay? So like, let's try to answer it this way. If for every dollar I put in, I was very certain to make $1.50, okay? Versus, or let's say I'll either make $1.50 or I'll make $1, okay? Versus I'll make $2.50 or lose $1. Okay? There isn't good or bad. Let's say you have a choice. You might lose $1 for every dollar you put in. Or that's probably too much, right? Both of this is probably too much. Let's do it a little more likelihood. Okay, let's do it this way. For every dollar you put in, you might make $2 or you might lose 50 cents. And then you look at these things and you make a decision. But at least you're informed about risk and potential payoff. And you might say, well, you're making a decision, you want to go after the $2. And you're willing to risk the 50 cents. Where this guy says, well, I make all my money back or I'll make 50% on my money, but I own an asset. And it should continue to go up in value in the future. And it should continue to pay me income in the future. So I'll take the low volatility, right? In exchange for the consistent returns I can count on, versus you might have a losing year or you might make a lot of money. What's your strategy? What's your risk tolerance? What's the point of your investment? And we forget all these things. Most people just kind of look at numbers and they say, good, bad. What do you mean good or bad? Right? What do you mean good or bad? There's no good or bad. Okay? Michael's pointing to a calculator and stuff. Well, the thing is, even with the calculator, most people don't understand. My first job is for you to understand, that you get it, that you can use, there's probably I won't say 200. There's probably 20 different Sharpe ratios. And what's your discounting factor and what's your beta? And it can get really, really, really complicated. But what I'm trying to show you is the risk. It's measuring risk. And they only include open trade data. That's why this is why it's dangerous. So one of the things that Ryan and I are doing with FX Bootcamp Live group, which will be what I call the professional group, our new version of our site will be calculating Sharpe ratios in real time, open and closed positions. So the problem is most people have just closed positions. So they'll close a whole bunch of positions, and then their MyFX book will show their Sharpe ratio based on closed positions. Now here's where it's wrong. Then that idiot goes out and talks to investors and says, look at my Sharpe ratio as reported by MyFX book. Now, here's the cheat. All their they're crappy trades. I was going to use a stronger word. All their losing trades, or let's say many of their losing trades, they decide to not close because they're losing money. So what they do is they close a whole bunch of open trades and then push up their Sharpe ratio because it's not counting open trades, it's only counting closed trades. So you close all the good trades, then you go to your investors and say, look, this is a neutral third party reporting that I have such an amazing Sharpe ratio. And by the way, this doesn't include the 19 losing trades I have right on pulling our results down, but that's not in the calculation, so here's the good number. And unfortunately, an investor that is unknowledgeable might make a decision because of the good Sharpe ratio, which is bad math. So FX Bootcamp won't rely on third-party neutral tools that show you not misinformation because they're doing it right. It's just wrong information because they're not including the most important aspect is what's in the trades now. So if I show you 100 winning trades, but I have 4 losing trades, right? I might show you, look, I made 1,000 pips over here, but I might be down 1,000 pips in the open trades. And my Sharpe ratio will be reported as great. I make money with low volatility. Why? There's no volatility because I didn't close my losers. You see what I mean? So it's really disinformation. And this is where a lot of people get into trouble. So they're like, well, I'll invest into this dude because the Sharpe ratio is so good. Yeah, the Sharpe ratio and all the positive closed trades. What about all the losers? Okay, so the problem is they're not mark to market. And that's wrong. That's all designed for the stock market. The stock is worth whatever you sell it for. Not in currency. Money is money and money is money. And we can calculate in real time the value of money. So if you're holding losses, we can mark it to the market and tell you right now, if you closed 1,000 pips worth of winners, but you're holding 1,000 pips worth of losers, you're not profitable, nor should your Sharpe ratio show you that you're a good trader. You suck, you're dangerous, and you're very nearly a thief and a liar to your potential customers and clients. Oh, wow, I'm opinionated. So anyway, for our customers and clients and investors, we'll have real-time Sharpe ratio calculations, maybe the only hedge fund in the world providing that kind of information so that we have complete transparency. Now that is what protects clients. That is in the best interest of the client. Radical transparency. I know, right? That's good, right? Nice. Yeah, it only costs thousands of dollars to do. Okay, cool. Yeah, well, that's where I'm trying to get, because they know people don't know the real truth. Correct. Has anyone here ever used a copy service? Put money to follow a great trader with an amazing track record? And that trader has years of profitable trading. You put money in and for some reason it loses money? Has anyone ever done that? You're like, this guy's up 1,000% over 3 years. I will follow him. And then you're like, must be bad luck because I'm losing money. Kareem, anyone else? There's lots of services like that. Oliver has? Only in demo account? Daniel's tried it? Farhan? It's weird, right? You need to take care of yourself. I'm not saying it always happens. I'm saying it's very, 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 very possible because you're getting the best available data but it may not be accurate. Okay, that's all. You're getting the best available data. It may not be accurate, and you may not actually understand what the data. Okay. Well, Kareem says he figured out how they make 1,000% a month, but that's the problem. That should tell any knowledgeable investor how dangerous that is. I mean, I'm telling you, 10% in a month would have me scratching my head. If you're investing into someone that made 100 or 200 or 500 or 1,000%, then as an investor, there's a massive disconnect. But of course, most people in that situation don't know what they're doing. So it's a bad trader followed by a bad investor. Now that can be fixed. So I don't have any problem with the idea, right? I don't have a problem with copy trading, but I'm trying to teach you guys real skills as investors, as traders, as financiers, right? As investors, you should know money, right? You should know banking. So sometimes we talk about real estate. Sometimes we talk about all kinds of things, bonds and spreads and yields. And I just want you to know so that you can make informed decisions. And if you are someone that's stuck in a poverty trap somewhere, that you have the strength to fight your way out because you have brains and tenacity. Otherwise, I think it's very difficult to get out of that situation alive. Okay? Cool, right? So thank you for being here today. Thank you for being a subscriber. Thank you for being a client of Trader's Way. Please join fxbootcamp.com. It's still 76.4% off. And then you'll be asked if you want to join my live group, and we can work together. We can fix you through the video training and the live training. I'm doing a whole bunch of extra stuff for you in January, including a new course. I mean, this is the best time for you to join. And I will help you become an independent trader that bases all your trading on planning and having discipline to carry it out. And then one day you might be able to join my professional group and spend years learning how to be a professional manager of money, a portfolio manager with a real track record of success. And you should probably make hundreds of thousands of dollars doing so. And then you can join my hedge fund. And I'll say, well, you got to contribute $400,000 to get in. And you're like, okay. And you got it. You got it. You have it. You made it. It's in your account. You're like, oh, I'll just transfer my account over into the firm. Cool. Now you got skin in the game. Now someone can actually invest along with you. Because let me tell you, rich people don't invest when you have no skin in the game. Because just imagine this sales pitch. Hello, rich person. Will you invest millions of dollars with me? I'm very successful. I have a great track record of success. But I have no money. They're like, wait, you're successful, but you don't have any money? Like, no, I don't have any money. But will you give me money? They're like, pfft. Right? Oh my God. Can you imagine a poor person talking to a rich person? Dude, it doesn't work. Think of it. They're like, oh my God, you don't have any money? You got to be a success. You got to have skin in the game. Right? No one's going to give you $1 million if you got 10 grand in the account. Like, it ain't going to work. Like, it's laughable. So I will help you grow. It might take you 10 years. Cool. I'll see you at the end. You'll be a success. Okay? Okay? But do you have that kind of game plan? Right? I'm asking you, have you planned out January? Now I'm asking you, have you planned out the next 10 years of your life? Are you going to be in the same situation 10 years from now? I don't know. Is that what you want? You want to be in the same situation 10 years from now? Well, Jim, I think Thursday is like, is it Christmas Day? No, it's not Christmas Day, right? Yeah, we'll have to do milk and cookies or something. How can one become a professional member with your team? You have to join FX Bootcamp first, take all the courses. Then second, be in my live group and work with me until you've mastered what you're doing. Then third, there's an examination. It'll take you about a week to do. And in the final examination, you will have to earn at least 10,000 pips in 1 month. And if you can't do that, you're fired and there's no refund. It'll cost you $200 to take the exam. And if you can't even make 10,000 bucks on this, and we track you, you have to do it from your MT4 or MT5 account. We track you. And if you can't do it, we're not interested in working with you. Then after that, you have to, once you're in, then you have to prove that you can trade. And then once you can prove you trade on a demo account, then you have to prove that you can trade on a live account, where you turn $3,000 into $5,000. That's it. And if you can't do that, we're not interested. Now, if you can do that, now you have a track record of success. Then I can wiggle the lamb's tail, or what did was it the genie that wiggled her nose and stuff would happen, or is that the witch? Anyways, I'll jiggle my nose and all of a sudden, boom, you got extra money in your account. And now you got to grow that account into hundreds and hundreds and hundreds of thousands of dollars. But now you're trading other people's money. Can you do that? Well, if you can't do that, how am I supposed to raise money and give you big money? I can't give you money if you can't even do that. You're like, well, right? So it's like, I'm just trying to help you do what needs to get done. And if you can't do all these little tests, then forget it. There's nothing I can do for you. Okay? Michael, I want that part, right? 3,000 into 5,000. I want that to occur over a year. See, nobody is interested if you turn 3,000 into 5,000 in a month. You're a degenerate gambler. People will run away from you like stink. People are not interested in getting rich quick because you're working with rich people. So what they want to see is income, an income stream that they can count on. That means steady okay? That means steady return over low vol equals cash flow. And your cash flow per dollar needs to be more attractive than the cash flow per dollar. So here's your Forex. Your cash flow per dollar now, which is called risk adjusted, right? Your risk-adjusted performance in Forex needs to be more attractive than your risk-adjusted performance compared to stocks. and your risk-adjusted performance should be more attractive to a potential investor than real estate. It's just cash flow. If I give you, for every dollar I put into the Wayne machine, how much will I expect out? For every dollar in, how much can I count on? Where will it be at the end of the year? I have no idea. Then F you, I'm going somewhere else. I'm buying another apartment building. Because that one, I get rent, and the value of the apartment building will go up. And if there's a cost associated with it, if they need new paint, if they need a new windows or a new roof, I know what that is, and I can calculate it. I can put it on a spreadsheet, and I can go through the cash flow. If I invest with you, you're like, shit. We could be down 20%. We could be up 200. I have no idea what's going on. Nobody's interested, yo. So if they put $1 into the Wayne machine, they want to know how much is coming out at the end. $1.25? $1.45? $3.82? What is happening if I give you money? I don't really know. I don't even know what's going on in January. I can't tell you what's going to happen in the next week until the candle closes. Okay, great. You understand? So your risk-adjusted performance needs to show that you're providing a cash flow income stream. Nobody's interested in your 5,000% return on investment. That's good for poor people that don't have many money because they want you to turn... Right? They want you to turn $500 into 10,000. Right? Or even 5,000. Right? Wayne, can you turn my $500 into 5,000? Well, you're willing to take risk because you're broke. You lose $500, you're still broke. So you got to get past the poverty mentality, right? You can't talk to someone that's got a ton of money and say, let's risk up. You might lose your 10 million. And you just lost the guy. You're like, what? You might lose my 10 million? Well, no. But we can turn it into $1 billion. Wait, you said you might lose my $10 million. My life savings. Yeah. Well, only a 30% chance, but there's another 30% chance we break even, but there's another 30% chance that we make more money than God. But you might lose my entire life savings. I will have to go back to work. I will have to sell assets. I'll have to sell my mansion. I'll have to sell my Ferrari because you screwed up. You're like, well, it's only a 30%. Like, nobody's interested in that pitch. But if there's a 30% chance of losing $500, you're like, well, it's only $500. I'm poor now. So if I lose it, I'll be poor then. Nothing's changed. Dude, a rich person, it is afraid of risk. Oh my God, to be rich and then to be poor. That is hell on earth. They're not interested in your sales pitch. Right? Am I making a connection there? Right? Oh, Gary, you're in your 8th month in a row of demo profit. And you've tried over a decade. Wow, look at that. Sweet. That's a good year. All right, cool. So then what is the pitch? Sir, if you put in $1 million, you can count on, every year I will pay for your Ferrari payments. I will pay for the insurance on your boat and the gas. And the rest of the money will still be in your account. So I can do that every year. Think of it. If you invest with me, you will be able to drive your Ferrari around for free. You'll be able to gas up your boat and drive your friends and your family out on your yacht You can cruise around the bay and live the life of luxury from the cash flow I provide. I won't turn $1 million into $100 million and buy your boat, right? Whatever, but I can gas her up. Your moorage is free. Your Ferrari is free. There's something that this money could be dedicated to. By the way, I learned this in the Middle East. I learned this in my first trip to Dubai. And I met with a whole bunch of investors. And I realized the mindset was different. I was still thinking poverty myself. Where they're like, look, we already got lots of money. We're not interested in you making money. You have, well, like turning it into something big. What we're interested in is that you never, ever, ever lose the principal. That has to always be there. But you need to pay for the lifestyle. There's a kid, 27 years old, he can give you $25 million in cash. But he needs a stipend to pay for the apartment, to pay for the girls, right? To pay for the cars, to pay for the travel, right? So if he gives you $25 million, right? He needs, let's say, $5 million a year to live. So he's willing to give you the $25 million, but you have to always be able to provide the $5 million in cash so he can live. He won't bother you. He's not even interested. But you cannot lose the $25 million. Now, to change it now, so one of the things I did at Harvard was I did a class on managing the endowments for artistic institutions. Like we did the Metropolitan Museum of Art in New York City, and we did the Lincoln Center of the Performing Arts in New York City, were the two that I did. We met with the lead, the person in charge of the Yale endowment. I met with the former, in fact, he was my professor. He used to run the Metropolitan Museum of Art's endowment, right? The largest artistic endowment in the world, the Met at the New York. So he managed it. Then and then we met with the second largest university endowment in the world, right? So I have a good sense. I went through their books, their finances, their projections, their risk assessments, like literally, right, through all of this, broke all this down. So I know a little bit about something, okay? And here's what you need to know. They have billions of dollars. Now, they do, but most don't. But your university, let's say a museum in your city has money set aside that's being invested so that they can make sure salaries are covered and insurances are covered, and they can have the cash to borrow art from other museums to get people to come into the museum and take a look and pay the little $8 entrance fee. But by the way, the $8 entrance fee doesn't even come close to covering it. So they need to know they have millions, it may be billions, depending on, right? Maybe it's only hundreds of thousands, depending on where you live. But they have all this money, and from that, you must make 8% a year. And whatever that turns out to be, is their budget for the year. They're not interested in you turning $1 million into $5 million. They're like, whoa. What do you mean turn $1 million to $5? We're not interested in 500%, because if you lose it, everyone loses their job. We have to sell all the art, shut down the building. And you're like, what the hell was that all about? That's not the mission of the organization. The mission of the organization is to benefit the community through the inspiration of art and the culture. So they're like, we're not interested in this, bro, but we have to have this every time. Right? Every time. Every time. You see how the sales pitch is similar? The institution is living on the income. You cannot lose the principal. But the kid in Dubai with the $25 million cash account from dad must live every year on a $5 million budget. His number is 20%. And every single year you have to produce 20% after your fees. And that's all. That's all. Now, that might sound like a lot. That might sound like a pittance because some of you guys are trying for 20% a month. I'm telling you, 8% a year gives you a career. You'll sit on the board of directors for the institution, and you will advise the finance committee on A, future budgeting, and B, the risk associated with the market and business cycle to their endowment. Okay? Cool, right? So I'm sorry if that's boring compared to the Bitcoin guy on YouTube that has 7,000 people watching him. Go, go, go! Fire, fire, fire! Shoot, shoot, shoot! Trade, trade, trade! F-bomb, F-bomb, F-bomb. But I am trying to give you some deep knowledge, and I hope you appreciate that. So again, please join FX Bootcamp. Please open an account at Trader's Way. Please plan out your year and your quarter and your month and your week and your days. Please put forethought into your trading, right? Please take control. Please have a boss mindset. Think long term, think steady, low risk, low volatility, consistent returns, consistent behavior, and analysis, right? Analysis. You've done the research and you've made decisions. If you don't learn how to make decisions, you're not a boss, nor do you provide value. So you generally have no value. Okay? Think about it that way. So peace on earth. May the pips be with you. May your profits be above average. Thank you for being in my life. You're good people. I like our time together. You make me want to be a better trader. And I'll see you tomorrow. Peace on earth.